Hello there, this is fairbinaryoptions.com, and this is the US dollar Japanese yen on the screen. And we talked about this currency pair for quite some time now, in the sense that we were looking for a rising wedge, and it seems that the market is confirming that scenario. Now, what kind of a rising wedge? Well, the rising wedge has basically the first wave ending at these highs, and after those highs there we should look for a second wave. So the second wave to the downside comes in the form of a double combination that ends with a contracting triangle. What is the contracting triangle? Well, this should be the A and C trend line, and this should be the B to D trend line. This will be the B, and this will be the B to D trend line, like this. As you can see, the B to D trend line is already been broken, and it means that the triangular formation is normally being completed. And we can say that from an Elliott waves point of view and from a rising wedge point of view, this is the first wave, and now this is the second wave. Well, if this is the first wave, this is the second wave, then definitely we need the third wave to the upside. But in a rising wedge, the third wave always, it is being approximately 61.8 out of the length of the first wave. So we need to measure, to take a Fibonacci retracement tool, we measure the length of the first wave, we take 61.8 out of it, and we should project this outcome by the time that we said that the second wave ended in here. And just like that, our value or target for the pair to the upside, if you want, or let's say the take profit in case you are trading spot market, should be 122.70, as that would be the measured move of such a pattern, and only the third wave at that very high. So what to do here is only to go and trade call options, and we want to pick up the right expiration date. And in doing that, we should look at the calendar, and we are now on the 23rd of April. So basically we want to trade either with end of day, or either with end of week, or with end of month expiration date. I would choose both of them. So end of week expiration date for US dollar and Japanese yen, namely for tomorrow and on Friday, and end of month would be basically less than or approximately 1 week from now, as we are on the 23rd of April. So exactly 1 week from now we'll have the other expiration date. So let's write here on the screen that we are favoring here call options with end of week and end of month expiration date for US dollar Japanese yen, as price is breaking out of a bullish triangle that should act as a reversal pattern. Prior trend has been bearish, so the reversal should be to the upside. Split the investment into two options, and you will have two different options with two different expiration dates. Thank you for being here. Make sure you check fairbinaryoptions.com and Binary Options Academy, as we have there a lot of interesting projects, of course. Thank you, and bye-bye.